Inflation. Why can inflation make you poor? Inflation is basically the increase in the value of goods and services in an economy. What does that even mean, and is it a good or bad thing? Take a time to think about what £10 or $10 in your country can buy you right now. If you look back, say, 10 years ago, you'd realize that the same £10 would have allowed you to purchase a lot more goods back then. That is because every year, the price of goods within an economy increases at a particular rate, which we call the inflation rate. Now, since you can buy lesser and lesser stuff from the same amount of money each year, your money starts to lose its value. That is precisely why it's not really a good idea to cash out your entire net worth and keep it locked in a safe. In fact, if you think about it, you would actually be losing out a set proportion of whatever amount of money you hold and do not invest. The investment does not have to be something huge. All you have to do is make sure your investment gives you a return which is higher than the inflation rate. Let me explain. Let's imagine that the inflation rate in your country is 5%. You have £1,000 at your disposal at the beginning of the year, so you decide to invest it in a savings account. These banks will offer you an interest rate of less than 1%, and you'd happily take that assuming you're making money. However, in reality, you'll only gain about £10 from interest by the bank and lose out on £50 due to inflation. That's a loss of £40. Suppose the return on your investment was, say, 10% annually, on the other hand. In that case, you'd have ended up gaining £50 even after losing £50 because of inflation. This is why it's really important that you check out the interest rates and inflation rates in your country before making that investment. Technically, inflation is not the worst thing for the economy. As more money enters the system, the purchasing power decreases. The price of goods rises, causing people to increase their spending. This in turn increases the demands of goods, which triggers an increase in production. More production is supposedly healthy for the economy as a whole. On the other hand, if an economy suffers deflation, it would have terrible effects. As the prices of goods decrease, the spending will also lower, triggering a decrease in demand. This will lead to lower production levels, which will start to shrink an economy. People will lose their jobs, and this cycle will become really hard to come out of. So yes, a well-managed inflation can definitely be a good thing. Thanks for watching. If you like the content, please consider subscribing to our channel for more interesting videos in the future.